Hello and welcome to today's update. Today is 28th of September. Market had a big day today. You're looking at SPY. SPY was up almost 2% today to close at 370. QQQ was also up almost 2% to close at almost 280. So this is an hourly chart of SPY. You see that there is this downward sloping channel. SPY had fallen below this channel last week, and this purple line you see is the mid-June low. So it's consolidated between the mid-June low and the bottom of the channel for a few days, and then today's rally pushed it back inside the channel. It spent a lot of time inside this channel, so it was inevitable that it was going to get back inside this channel. So now that it's inside this channel, let's see what we can expect. Now, obviously, the short-term momentum is now up. Short-term means I'm talking about maybe over the next day or two, is now up. You can see even on hourly basis, the momentum indicators have started to move higher. MACD, although it's below the zero line, it's moving higher. If it crosses above the zero line, that would be positive. You can see RSI has started to move higher also. So what are the levels to look out for? First of all, this is one area to look out for. So this would be an area of resistance. So this is around 373.75 to 374. So that would be the first area of resistance. Next area would be this level, which is around 382 level, and that also will bring SPY to the middle of this channel. You can see the middle of this channel acted as resistance right here. Then there was resistance right here. There was support right here. So the middle of the channel is also going to act as a resistance. So that would be around 382 level. After that, the resistance would be right around here, which is around 389. So those would be the levels on the if SPY continues to move higher, and obviously the support would be the lows that it formed yesterday, which is around 360. Around 360. That's the low. So that would be the support. Now, if we look at the daily chart of SPY quickly, so this is the daily chart of SPY. You can see that SPY has been forming a base of some sort near the June lows. So this is the June low. So it's been forming a base, and today it bounced. So there is room for additional rebound. If we have additional rebound, this would be an area that we can expect SPY to move to. So this area is around 389. If we look at the daily chart, the hourly chart, you can see 389 would be right around here. So SPY would have to go up to this level before it reaches this resistance. You can also see that the moving averages, the 20 and 50 moving averages are also in this area. So this would be an area of resistance if there is a further upside. On a daily basis, the momentum indicators are still weak. You can see the MACD is well below the zero line. It hasn't crossed yet. Looks like it may do so, but it hasn't done so. Even if it crosses, it's still below the zero line. RSI is below 50, so the momentum indicators are still weak. And when momentum indicators are weak, generally what happens is that any rally tends to be short-lived, so be aware of it. But they're in oversold condition. Stochastic is still in the oversold area, so there is room for additional bounce. Now, one reason why market rallied today is what actually happened in the bond market. So let's quickly have a look at bond market, and then we're going to come back to the stock market again. So this is the Fed funds futures for April 2023. So this one lost almost 13 basis points to close at 4.4%. Um, it had risen to almost 4.7% last week, and that level basically is where the Federal Reserve expect the Fed funds rate to be sometimes in the middle of next year. That's their terminal rate target. They expect to raise the Fed funds futures to that level and then leave it there for a while. But what happened is the Fed fund futures already reached that level now. So because it already reached where the Fed expects the terminal rate to be, that's why we see some pullback here. If we look at the March contract, the Fed funds March, that also pulled back 10 basis point today to 4.39. It also had reached the Fed's terminal rate target of around 470. But the biggest moves today actually came in the 2-year and 10-year. So let's have a look at the 2-year. So this is 2-year. 2-year fell almost 18 basis points to close at 4.11. Now you can see that the 2-year has been going up sharply. In fact, it rose to as high as 4.36% on Monday. And what that basically means is that that level would be above where Federal Reserve expects the Fed funds rate to be by the end of this year. Federal Reserve said that they expect the Fed funds rate to reach 4.25 at the end of this year. So the 4.36 was above where the Fed expects to be by the end of December. So that was like, it's like going ahead of that event. So it was a matter of time before we saw some correction, and we saw big pullback. And part of the pullback was also what was happening in UK. In the UK, the yields have also risen sharply in recent weeks and months, and so the Bank of England had to intervene in the market today to buy long-dated gilts, and that brought yields lower in UK, and that also had a impact in the US market. In fact, in the European hours, the US bond yields were strong, higher, but once the gilts, once the Bank of England started purchasing UK bonds, yields started coming down in UK, and that also had an impact on the US, and that's why you see a big drop in yields today. Not to mention the fact that they were they had gone up sharply, and you might say that they had gone ahead of themselves for the time being. If you look at the 10-year, it dropped almost 22 basis points today. Big red candle right here to close at 3.72. In fact, in the European hours, it traded as high as 4%. So there was a big swing, and as a result of this decline in yields, it provided support to the stocks. In fact, during Asian hours, the US futures were all down. Nasdaq, S&P 500 futures were all down. But once the bond yield started to retreat, that basically lifted stocks up. So this is so we need to keep watching what happens to the yields in the US market in coming sessions. If they continue to pull back, I can see stocks rallying further. I mean, 10-year yields recently have been going up sharply. You might say a 4% yield probably is a bit high, at least for now. It can go up further, but it had been going up in recent sessions, and without any additional new data coming in, you might say that it had gone up a bit too much. That's why we see this pullback. So this is definitely positive news for the stock market. So going back to the stock market, SPY, we've talked about SPY, we've talked about SPY on a daily basis. So let's talk about QQQ. So this is QQQ. This is the daily chart of QQQ. QQQ hasn't actually gone below the June lows right here. So this is the June low. It hasn't gone below. It came close to it. Nice bounce today from oversold condition. As you can see, it's been coming down quite a bit. And momentum indicators are all in oversold territories. So there was bound to be some kind of a bounce, and weakness in the bond market weakness in the yields definitely provided a support to the stocks. So QQQ rose almost 2%. I can see additional gain if the yields continue to pull back. So this would be an area. So see this candle right here, the bottom of this candle. So that would be an area where I see some resistance right here. And you can see at that level, you also have these moving averages, the daily 20 and 50. So if it goes up to this level, this is where maybe the bears could come back again and try and push the market down. Since QQQ hasn't gone below the June low, they might make an attempt to push it back below the June lows. So this would be a good place for them to get back in, because there's some resistance right at this level. Overall, the momentum indicators are weak. MACD is well below the zero line. Looks like it wants to cross. RSI is below the 50 level. This is the green line, is the 50 level. But we're still in oversold territory. Stochastic is in oversold. So there is room for additional bounce. If we look at QQQ quickly on a smaller time frame, just to see, so this is QQQ. So we have this channel right here. So it's now approaching the midpoint of this channel. So the middle of the channel has acted as resistance right here, resistance right here, resistance right here. There was support right here. So definitely expecting some resistance at this level to 80. Once it's able to get through that level, then resistance would be around here, which is around 285, 286, 287 level. Ultimately, obviously, the resistance would be the top of the this channel. So that's on a shorter time frame. The momentum indicators are increasing. You can see MACD is now rising and it's about to cross above the zero line. So that would be positive. RSI is also on the move. So this is happening on a 1 hour chart. But on a daily basis, the momentum indicators are still quite weak. So we'll see whether or not there is some uptake in coming days. I mean, there is definitely room for additional, rebound. If we quickly look at S&P 500, so S&P 500, you can see formed a base right here near the June lows, mid-June lows. So it rallied today. So next area of resistance would be this area right here. So let's just draw a quick line. So it would be around here, around 3,900. You can see the moving averages are coming down. There's also trend line resistance. So all of these are coinciding with this level around 3,900. So if S&P 500 were to rally to this level, we could see bears trying to get back into on the short side again and try and push the market lower. So we'll see what happens. Once it gets there, we'll see what the price action is at that time and make a decision as to whether or not there is additional downside coming or not. Now keep in mind that we're coming to the end of the month, and then next Friday, not this Friday, a week from this Friday, we'll see the first set of reports coming in for the month of October. And the unemployment report will come out, and that would be an important report, and that could have an impact on the market. So obviously we'll see where S&P 500 is at that time, and make a call as to what might be the probability, what might happen at that time. But in about just over a week's time, we'll start to see some important economic news. Um, so moving on to, so we've talked about the bond market. Let's look at the dollar quickly. Dollar obviously came under a lot of pressure because of the fact that the bond yields pulled back. You can see the dollar had been going up strongly as yields were rising. Dollar had reached the top of this channel, and today it pulled back sharply. It lost 1.27%, but still remains within an uptrend. So near-term support would be around the middle of this channel and finally to the bottom of the channel if it continues to pull back. But overall, it still remains in an uptrend. A lot of people are concerned that with strong dollar, many companies, U.S. companies, are going to have currency-related problem because they have overseas operation. Moving on to the oil market. So oil had a big day today. The crude oil was up almost $4 today, 5%. That's because of hurricane in Miami, which is likely to cause disruption to the oil supply. So that's why the oil price was up sharply. But overall, it remains in a downtrend until it's able to overcome, let's say, the resistance at the top of the channel. It remains in a downtrend. So this bounce is merely, a move towards the upper end of the downtrend. The momentum indicators are still weak. MACD is below the zero line, RSI is below 50 level. So, for the moment, resistance would be here. Until and unless it overcomes this resistance, the path of least resistance is still down. But there is still some room to the, to the upside. It can go up to the upper end, which is around 91. It can go up to that level, before encountering this resistance. But overall, in a downtrend, so let's see what happens in coming days. So if we look at some of the sectors and see, we'll start off with the financial XLF. Again, it's formed a base or attempting to form a base here near mid-June lows. It is oversold, so there could be some additional bounce right here. So it can go up to around this level, 32.5 XLF. They are oversold, so I will view this as an oversold bounce for the moment because it remains in a downtrend, making lower highs and lower lows. So this move would be just a short-term bounce for the time being. If we look at XLK again came to the June lows, stayed there for a couple of days, bounced today. You can see there is it's making lower highs. So this downtrend is going to act as a resistance. Additional resistance would be right around here, 131, just above 131. Again, this bounce is merely bear market bounce at the moment because you can see it's clearly in a downtrend over the last month or so. But if you look at bigger time frame, it remains very much in a downtrend. So this bounce is at the moment would be something like this within the context of the downtrend. If we look at semiconductor, so this is SOXX. So this is now near the bottom of the channel. Very oversold. It's been pulling back from around 423 all the way down to around 334 now. So it's oversold. It's due for a bounce right here. Momentum indicators remain weak. MACD, RSI below, into negative territories. But it's oversold, so we could see a bounce, maybe get back up to the middle of the channel. So if the technology sector continues to move higher, then we could see the semiconductor, they can also rally. XBI, this is the biotech. So nice move today. It was up over 5%. So we've got this trend line resistance coming up. So if it rises further, so 84, 85, it's gonna have to deal with this trend line resistance. It's making lower lows, so this would be this bounce is nothing but within the context of the downtrend. Momentum indicators remain weak. MACD is below the zero line, RSI below 50, so the momentum indicator is still negative. So we'll see whether or not it's able to overcome this resistance. If we look at the solar sector, so it also has been pulling back recently, found support at this trend line. Now initial resistance would be at this bottom of the channel, and then at the middle of this channel, and finally to the top of the channel. I mean, there is room for additional bounce because all of these indices, they are quite oversold. So today was a relief day for all of these, so there could be additional rebound in coming days. If we look at some of the individual stocks, we'll look at Tesla. So Tesla was weak for a good portion of the day, but managed to recover and finish up almost 2% to close at 287.81. So overall, it's trading within this zone right here, between 267 and it's around 315 on the top. So it's now coming up to the middle of this channel, so which is around 291. So if it's able to get through this level 291, then it exposes the top of the channel, the 314, 315 area. Tesla is going to move based on what happens in the overall market. If the overall market rebounds further, then I could see Tesla breaking through this level 291 and then heading towards 300 and beyond. So it all depends on what happens to the technology market. So Tesla is going to move in line with the overall market. Apple today was weak for a good portion of the day, but it managed to cut its losses. It fell $2, almost $2, to close at 149.84. In the process, it managed to hold this support. You see this trend line support, it traded below this, but it managed to finish it above this line. That's a positive sign that it did break this support. Now resistance is at this trend line. It's been making lower highs, so obviously we want to see Apple break through this level. So we'll see. I expect Apple to move along with the overall market. So if the overall market remains positive, so maybe it can come up and retest this resistance. So we'll see how Apple does in coming sessions. Next areas of support is around here, 143, right here. Resistance is at the downtrend line. Amazon, this is looking within the bearish context, it's looking positive. The structure right here is quite positive. This is a bullish pattern because in here you can see, if I show you the line chart, you can see what I mean. You can see that it formed a W pattern. The W patterns are usually bullish patterns. You can see there was a W pattern right here. You can see there was a W pattern right here. Whenever you see W patterns, these are usually bullish pattern, and M patterns right here are bearish pattern, where it makes a double top. Where when you see W pattern, double bottom, they are bullish patterns. So this is a bullish pattern. At least it doesn't mean that it's going to go all the way to new high, but at least it shows that there is a little bit more to the upside. So initial resistance would be at this level 125, 126, and then it would be right here. So that would be around 136, 137 level. Now if the support is broken right here, then we're talking about the June lows right here. So again, if the market is positive in coming days, I would expect Amazon to move up and possibly challenge some of these levels. Let's see, Microsoft. Microsoft is trying to reclaim the mid-June low. So again, this is it rose almost 2%. Again, I'm expecting Microsoft to trade with the market. So if the market goes up, I expect Microsoft to rally. Now resistance would be at the midpoint of this channel. You can see resistance there, you can see resistance there. So I expect resistance to be at this level. If it's able to get through, then this area would be the next resistance point, and finally top of the channel, which is around 280. Now if support is broken, if it closes to, then this would be the bottom of the channel, would be the support area, because it's still trading within this downward sloping channel. So that's Apple. If we let's look at Netflix. Netflix had a very strong day today, so let's just expand this a little bit. So you can see that it held up quite well in recent sell-off. You can see the middle of the channel acted as support here. It came close to that level, and then it bounced very strongly. The top of the channel is going to be the resistance. So that's around 260 level. So that would be the resistance. Support is obviously the middle of the channel. And the resistance would be, it looks like it could retest the resistance. And then there is a big gap right here. There's a big gap. It can start to make an attempt to fill the gap. Not sure that we'll be able to do that, but it's looking positive, definitely. Let's see what else. Let's look at Google quickly. So this is Google. Not a great looking chart. There was this channel, it fell below the mid-June lows. So this is the previous low. It fell below that. Now it's trying to reclaim this low, this level. So you see, it spent a long time inside this channel. So there would be a propensity to get back inside the channel. I mean, it's possible because it is oversold. It is oversold. So because you see, it dropped so much. So it is, it can get inside. Once inside there, this area is going to be first resistance area, which is around 107.50, and then the middle of the channel is going to be the next level, which is around 112. So that's Google. Well, that's all for today. Thank you very much for watching the video.